Thanks so much for appearing today. Another edition, Market Hunter Thursday with Hervé. Atlanta, Georgia, population 507,000, median income 55,000, median rent $1,500, home value about $312,000. If you got median home value in Atlanta of $312,000, some good things must be going on in Atlanta. Remember, that means there's obviously home values higher than $312,000 and some lower. And then headquarters of big time companies that we all have used and shopped at before: Home Depot, Delta Airlines, UPS, SunTrust Banks, NCR, and so on and so forth. So huge industry and job diversification in the city of Atlanta. Without further ado, we're going to bring on our guest speaker today, Mr. Matt Nicklin.
Hey.
Matt, good morning, man. How you doing? Welcome aboard. Thanks very much for joining us today here at Market Hunter Thursday with Hervé.
Yes, sir. Thank you for having me.
Absolutely. Matt, let's just go ahead and jump right into it. There's a lot of markets to choose from for multifamily investing. Why did you specifically choose Atlanta to start and grow your real estate portfolio? And what do you see are the great attractive benefits of being in the city of Atlanta?
Yeah, I've been investing here in Atlanta for 11 years, and it's just gotten better ever since I started investing. Great market to invest in, huge population growth, great job diversity, as you mentioned, and just overall a great market as far as appreciation and rent growth. I can certainly mention some numbers here as far as some of the rent growth that we've seen.
No, please do.
Yeah, so markets like Kennesaw, so suburbs are doing really well in Atlanta right now. So markets like Kennesaw, year-over-year rent growth, we're seeing 14.5% right now. Roswell, 12.5%, Brookhaven, 12%, Sandy Springs, 11%. So there's huge rent growth right now in the suburbs of Atlanta as population grows tremendously. For the whole state of Georgia, from July of last year, we've seen a year increase of 82,000 people moving to Georgia. So just a huge influx of people moving to Georgia, which pushing rents and sales growth as well for the entire metro area.
Matt, what would you say is some of the reasons behind, that influx of folks moving to Georgia? Unfortunately, I'm in one of those states where people have been moving out of New Jersey. So what do you think are some of the catalysts that have been driving folks moving to Georgia? And specifically, I got to imagine that Atlanta is a big, one of the bigger cities in Georgia that a lot of folks have been moving to.
Yeah, for sure. We have huge economic growth right now. So, as you mentioned, we have Home Depot, Delta, other companies. We also have Microsoft, who's making a huge investment right now on the west side. They're basically going to build a huge office complex over there, as well as a lot of other Fortune 500 companies that are moving to Georgia, expanding in Georgia if they're already here, which is just, offering jobs. Some of the great job numbers that we've seen, even though we had this pandemic in 2020, and we saw job numbers decline. Atlanta was one of the lesser declines in the nation. As far as that goes, Atlanta, Dallas, and Phoenix saw the smallest declines in job numbers in the nation. Now that things are somewhat returning to normal, we're actually seeing pretty good job growth as well. So very stable market as far as jobs go, and that's bringing a lot of people to Atlanta.
Right. No surprise. So jobs, right? We talk about real estate all the time: small, medium, or large, location. Matt, let's specifically drill into Atlanta, right? Like I was mentioning earlier, it's hard not to mention Atlanta. Atlanta is usually at the top of the chart, so to speak, when you are doing research in real estate. Where to invest, real estate, where to start in real estate, what cities, what markets, right? Atlanta is always in top 3, top 5, and so on and so forth, for all the reasons that you and I have just been discussing. That being said, is it too late to get into this game? If this is a football game, man, what quarter are we in real estate investing in Atlanta? And maybe that answer depends on what your specific real estate investment strategy is in for Atlanta, whether you're talking about flipping, whether you're talking about small multifamily, buy and hold. You used the word appreciation before. Should I just think about Atlanta and its metro areas as an appreciation play, which may go ahead and deter some cash flow investors from participating in, and so on and so forth? So where are we? Does the strategy depend exactly where are we in that cycle?
Yeah, so Atlanta has definitely seen a tremendous amount of appreciation over the last year. Year-over-year sales price on the single family side, we've seen a 17% increase year over year. So humongous. With that being said, I do see there's still being potential growth with the number of people that are moving here. So like I mentioned earlier, we're still seeing a huge net migration of people moving in, job growth there. And so even though supply is really low right now, the demand side is still humongous. And I see that demand side continuing to grow. There's an interesting article in BizNow this morning or yesterday talking about 1031 investors moving to the Sun Belt even more, which, they have a history of moving to the Sun Belt. But now there's just a huge influx of these 1031 buyers trying to, snatch up assets in the South. So and I do see that continuing.
So what do you think is causing these 1031 investors? That's a really interesting statistic. Thank you for that. When Matt mentions 1031 investors, basically it's an investor that has owned a multifamily for a while. He or she is turning around and selling the multifamily in order not to get hit with a huge tax liability. They turn around and take the profits of that sale, and they go ahead and they purchase another multifamily at the same price of that gain, or even a little bit higher, which helps them defer that capital gains.
I think they're seeing everything that everybody else is seeing as far as the job growth, the percentage of people moving in, the education. So not only do we have job growth, but we also have annual income increasing. So they see that potential to raise rents. They see the potential of the demand side for the rental. There being further appreciation as far as rents and things of that nature in the future.
If you're talking to a group of newbie investors, right, and folks that live in Atlanta, right, they don't want to venture outside of Atlanta, and based off of all the activity that's taking place out in Atlanta, it doesn't seem like they need to venture outside of Atlanta. How would you recommend that they get started, especially considering if they don't have a lot of capital at their own? We know that there's ways to get into real estate without putting a lot of your own capital at play. When you start talking about partnering up with people, using hard money lenders, using, an equity partner, that might be able to go ahead and sign on the loan for you and stuff like that. What kind of real estate investment strategy would you recommend that they get started with in that region?
Well, yeah, so I talk to new investors every day. They always reach out to me, and it depends on where you're at and what you want to do. You have to have goals, and once you set those goals, you need to figure out the factors to help you meet those goals, right? So if you're a smaller investor and you're just looking to get started with single family or things of that nature, house hacking is a great way to go. It's a great way to get in with low down payment, get conventional financing, so you have low down there. If you're looking for something higher, you need to be networking with lenders, make sure you get the financing sorted out, and just hone in your criteria. So as soon as you have your exact criteria and you start looking at deals and know the market very well, as soon as you do find a deal, you can move quickly and move forward with it. So it's all about, educating yourself in the market, knowing exactly what you want. And then when you do see that pop up, you can actually move forward, because we have very low inventory right now. So you have to move quickly if you do find something within your target.
Got it. You mentioned new development. From a supply perspective, when you see new development taking place, is it safe to assume it's new development of type A multifamilies, right? And fancy, swimming pools and all kind of amenities and stuff like that. Maybe even a nice doorman with a top hat and so on and so forth. Is that the supply that you have been seeing coming more and more into the market? And if so, if I'm an investor in just a C-type asset, something that I have to come in, put in a little bit of work, do some interior, exterior renovations to go ahead and help, jack up the rents. Should I feel threatened by the amount of new type A supply coming onto the market?
Well, so that's an excellent question. So the permitting for larger multifamilies is actually down.
Oh, okay.
But CBRE actually came out earlier this week and says Atlanta is the most favorable market for commercial development in the country. And this is CBRE, very well-known, commercial real estate.
Absolutely, sure.
It said boosted by low cost and strong university systems. According to the report, Atlanta is the strongest, most favorable market for commercial investing in 2021.
What's causing permits to decline? Is it just the developers taking it upon themselves to slow down on the development? They don't want to be caught with, too much in their hands, in the event that the cycle turns on them?
So I think we're seeing a little bit of that, and then also a little bit of shift in the market with COVID and everything going on.
Yeah.
There's been a huge shift to single family, right? So single family permits are actually way up, as well as speaking to the commercial permitting. So we are still seeing a lot of new commercial development right now, and that Class A, like you mentioned, for sure. but I think we're also seeing Atlanta expand out. So if you look at the city of Atlanta, we have a highway called 285. It's basically the perimeter is what people refer to. So if you're inside the perimeter, you're inside 285. If you're outside of that 285 perimeter. So we are seeing Atlanta expand out, which is why we're seeing some of these suburb rents increase so rapidly, is because the city is actually growing outward and outward as time goes on. And there's more land outside of the city. So we're seeing a lot of new single family developments outside of Atlanta and seeing that price appreciation growth outside of Atlanta, and also the rent growth outside as more people move to single family.
So permits for single family homes picking up. Now, these are folks, I guess, that have been living in the city of Atlanta. Is the thought process, I'm not sure, is the thought process living in, downtown Atlanta, whether it's getting older, wanting to start a family, want to start getting a little bit more bang for your buck because prices of living in downtown has gotten so expensive. I'm assuming that with all the activity going on, living in downtown has gotten so expensive. So you know what? Let's pack our bags and take it outside a little bit. Outside, like you said, this 285.
Yeah, I think you're seeing that in a lot of metro areas right now. People realizing they don't want to be in a high rise. There's still certainly demand for high rise living, but it's nowhere near as strong as it was in 2019. A lot of people moving to the single family route, but I think that will return when things normalize, and we're probably going to see another big bump in permits for these larger multifamily type developments.
Right. What are you seeing? You guys got a great, foundation of university system in Atlanta. UGA, Georgia Tech, Emory. It just goes on and on and on. Atlanta has such a strong base of Fortune 500 companies, like you were mentioning, across so many industries. I'm imagining as students graduate at the undergrad level, even at the graduate level, that there's really no need for them to leave, that they can stay, I'm sure, got great internships and then great full-time jobs. When they make that final decision to stay after graduation, are they looking to be renters or homeowners? And I guess that depends on pricing. I mean, on one hand, you may think that, well, they have to rent because it's too expensive to buy, but it's got to be real expensive to be renting right now too, especially if you want to stay downtown.
Yeah, for sure. And, I rent to a lot of students, and it's nice because you would think, a lot of them would move out once they graduate. But as you mentioned, there's a huge number of jobs in Atlanta. So a lot of them will actually stay a couple years beyond their graduation date, just because, they don't have that savings built up yet to buy out a home, or they're just not ready. They're still trying to figure out what they want to do, if they're going to be in that role that they just signed up for long term, or if that's going to be a stepping stone. We no longer have in this country people that stay with the company for 40 plus years. It just, you have a lot of stepping stones. So they're trying to figure out if that's what they want to do long term, and then, build up that savings so they can eventually buy a home.
For yourself, if you're, looking to get into a mid-sized multifamily, would you be investing more for cash flow or appreciation based on everything that's going on in that market?
So, cap rates right now are anywhere from like the mid threes to mid to high sixes. So, cap rates have compressed quite a bit because interest rates have compressed so much. And honestly, it's much more difficult to buy for cash flow right now in that small multifamily. You can certainly still find some opportunities, but a lot of people that are buying now are trying to buy based on appreciation.
When you think about an investor, kind of getting started, they always talk about maybe not necessarily employees that are going to work for you, but you need a team.
There's a lot of great community banks here in Georgia that will lend on these smaller multifamily assets or just real estate in general to investors. They're very easy to work with. And, you can just simply call them, have a conversation. They will tell you what their criteria is, what they're looking for as far as debt service coverage ratio, some of the other metrics they're looking for. Georgia is a very easy place to do business. Trying to establish those relationships is easy, but it will take some time.
What have you and your team members been seeing, from one source, from an investor, from the investment perspective? Is it folks, purchasing and holding on to a few years and, participating in the cash flow growth of that particular investment of theirs? Or are they flipping, whether it's single family homes or even small, mid-sized multifamily? Because as we were saying again, just want to take advantage of the appreciation in the market. What have you been seeing in regards to cash flow versus appreciation plays?
So we work with a lot of buy and hold investors. That's kind of our primary group that we work with. So a lot of them are buying for cash flow and future appreciation. With interest rates as low as they are, it's a great spot to be for cash flow purposes. You can get a really low rate, for single family 30 years, or if it's, a small multifamily, maybe a 20-year amortization, but still a very low rate on that loan, and, hold that asset for, 5 years or so and capture that appreciation.
Sure.
While capturing the cash flow. Flipping is super popular in Atlanta. The demand is unreal. We have very low supply of potential properties to flip right now, just like everyone does, throughout the country. Listed properties for single family is very low. Right now, we're at a 1.3 month supply, which is incredibly low for single family.
Wow.
To give you some historical statistics, for the last 2 years, we've been averaging around 3. Most economists and professionals say, a healthy market somewhere around 5.5 and 6 as far as the balanced market between buyers and sellers. So we're at 1.3 right now, which is an incredibly strong sellers market. There's a lot of different factors that play into that. One, the big factor is the foreclosure forbearance right now that we have going on. So that whole moratorium on foreclosures is basically, quote unquote, eliminated the distressed seller market, in my opinion.
Right.
People that would typically sell that were facing a foreclosure are just basically going into a forbearance agreement with the lender. And there's a lot of properties that are kind of in this ghost state right now. Atlanta, for instance, right now, we have 21% of FHA mortgages that are in this forbearance state or delinquent state. So that the way they classify the statistics is delinquent, but that will include forbearances as well. So it's going to be interesting to see how that kind of plays out in the market. But, that's a pretty large number of FHA, which is, typically first-time homebuyers with, lower incomes and not so high credit scores, how that plays out long term.
It's interesting that they don't include forbearance loans in delinquent, because forbearance, the way that I understand it, they really made it a choice for homeowners that they were going to get concerned. They were getting concerned that they would not be able to really afford their mortgage, one month after another, particularly as the pandemic hit really, really hard. And it allowed them pretty much to defer the payment of that mortgage, depending on the lender, the bank that they got their loan from, either towards the very end of their mortgage or maybe just 12 months out. But you're saying that FHA is including that in with the delinquent loans. It just seems a little strange to me. So they're considering it delinquent until, I guess, that portion of the loan is paid off by that homeowner, either at the end of 12 months or the end of their 30-year mortgage or something.
Right. Yeah. Because basically it's not performing for them, right? Because if they're not receiving a payment, they're considered in that delinquent state. So, nationally right now, we have like 5.5% of all mortgages in this, forbearance state.
Right.
So it's going to be interesting to see how that works out. Like you said, I think a lot of these lenders are going to do workout plans. So they're either going to do some kind of mortgage modification, where they re-amortize the loan or make that due at the end of the sale. Values are still incredibly strong. So I don't think there's any risk there of, not being able to add it onto the end of the loan. And then just whenever that property is sold, that lender collects those back payments. So I think that's what we're going to see a lot of. There's some people in the market, there's, speculating we're going to see this huge foreclosure wave. I don't think we're going to see a huge foreclosure wave, at least, nothing like we saw in 08, 09, 2010.
Right. Yeah, I agree with you.
I think we're going to see a lot of lenders do modification plans and things of that nature to keep them from going into foreclosure. I think we will see an increase in foreclosures from 2019 just because it was so low in 2019, but I don't think we're going to see a huge wave or any, crazy foreclosure wave like we did in 08, 09, 2010. Yeah.
And I agree with you. And I think, not only in Atlanta, but across the country, I'm not suspecting that there's, we're in the midst of a huge, real estate bubble or crash or anything else like that. And it's mainly because the banks have really, got smart. They learned from, 12, 13 years ago that they weren't going to overextend themselves on giving loans to folks with, bad credit, no credit, and so on and so forth. At least, a big percentage, which is what happened back in 2008. So listen, Matt, before we wind down, I want to you talked about some of the neighborhoods at the beginning of this show. I want, if we can come back to that, because it's
Sure.
just especially for investors outside of Atlanta that may be interested in getting started, maybe not necessarily in downtown, but they don't know the neighborhoods. It seems like the suburbs of Atlanta, not only do they get the benefit off of the growth in downtown Atlanta, but they also are benefiting from the growth within their respective markets. I guess if you can talk about some of those neighborhoods, where would you get started today if you were starting off and you didn't want to go into downtown Atlanta, but you're real comfortable in going into one of its so-called secondary markets?
Yeah. So, I mean, it just kind of depends on what kind of property class or area class you want to be in. You
Okay.
mentioned Alpharetta, that's Class A for sure.
Mhm.
Alpharetta has been dubbed the tech capital of the South. A
Oh.
lot of technology companies in Alpharetta. So, the median income in that area is very high. And a lot of tech companies have headquarters or an office there. So that would certainly be Class A. You have other areas. I mentioned Kennesaw that had 14.5% rent growth. That has Kennesaw State University there, which is growing. Also has a lot of industries there as well. So that's a great market, which is in Cobb County, which is actually where the Braves Stadium is at, is in Cobb County. So even they have moved out of the city of Atlanta. This
Right.
thing kind of expanded. But anything in Cobb, Kennesaw, Marietta would be great. Class B. There are certainly some Class A areas of Kennesaw and Marietta as well.
Right.
It depends on the property class and area you're trying to target.
Gotcha. So if I were to get started, let's say in a Class C area,
Mhm.
do you see those Class C areas turning into Class B areas over the next couple of years based off so much of activity taking place in the region right now?
Yeah, I mean, so you have areas like the West End, which historically would be Class C, maybe even D plus in some parts of the West End, and now you have the quarry development down there, the Microsoft development. The Beltline's expanding out there, so that area has already improved quite a bit in the last 2 years or so, and it's probably going to continue that growth trajectory, and could very well end up B or above type area.
With all of that, how can we help you out and your team at OneSource do what they do on a
Mhm.
daily basis?
Yep. So we're certainly growing still. So we're talking to people that want to join the team all the time. So if you do want to join the team, happy to have a discussion with you there. If we
There we
can
go.
help you with the deal, if you're an investor and you're looking to sell a deal, we'd be happy to help you with that as well. Or if you're looking to buy a deal, we're happy to help you either way.
Matt, I can't thank you enough. Thanks so much. Happy investing. Please stay safe amongst everything going on, and we'll talk to you next week. Be good.
Yeah.